And we have Mr. Nathaniel Herring. He is a CPA. Well, he has a lot of letters behind his name, but he is a agent for State Farm. Although he's not here to sell anything, he is here to solely provide financial advice for planning for college. And he has taken the time out to come speak with us, even though he had a previous obligation, he still wanted to be virtual. And Mr. Nathaniel, I'll let you kind of give us a little bit more about yourself and to begin your presentation.
Hey, good afternoon, everybody. Can you hear me and unfortunately maybe see me as well?
We can do both.
Okay, all right. As she mentioned, my name is Nathaniel. A little bit about me is I am married and I got a bunch of kids. So I have a 27-year-old, a 25-year-old, a 19, and an 18. So I just have a recent graduate from Florida A&M who works for me at the agency. And I also have a son at Howard and another son at Morehouse. So when I'm talking to you about education planning, it's not just from more of an academic standpoint, it's from more of a life experience standpoint as well. She did mention that, I am an agent with State Farm and I'm also an investment advisor. I'm not here to do anything other than to just educate and for the most part have a conversation. This information, as well as a number of different tools or learning resources, is available through the organization and they can forward those items to you. So there's nothing where I'm in the back end of this going to be following up or looking to interact with you. I'm purely here for just the spirit of sharing. I did build this as a non-branded kind of document because I really want to have a conversation. This is really, for the most part, about you and I sitting across from one another as if we had our shoes off, drinking a sweet tea on a Saturday, just having a conversation about things to think about when it comes to college education planning. So with that said, if you would advance to the next screen. So what I have is I broke our conversation down into a couple topical areas. I did a quick table that just kind of looked at, generally speaking, how much college costs in the state of Georgia for your average state schools, not your private schools. So this doesn't bring into the equation of things like Morehouse or Morris Brown or Spelman, but just more of your schools that are state funded. I want to have a conversation about budgeting, have some fun on that topic, and then talk about funding options for education. If your son or daughter has 300 community service hours and they're freaky smart and their GPA is 4.5 and they're making a 30 on the ACT, you can leave the room now because I think things are already solved for you. But if they're not, if there's something maybe not at that level, some of these topics might be of use for you. The other thing I want to do is just have a quick, candid conversation about disruptions in life. They do happen. None of us plan on a large version of tragedies, which could be anything like what we experience from COVID to something like a home catching on fire, like in California, and a parent not making it out of it. So I know that's a wide range. We'll kind of talk about scenarios. Then we'll do a quick review of resources and then my recommendation for next steps. So based on those topics, this is kind of shaped by talking with the ladies in the organization. So I built this whole conversation around their feedback. So if you'd go to the next slide, please.
I'm just gonna unplug the camera.
Okay, understood. The camera's making things goofy. Okay. So I'm going to give a few criticisms about part of the things that sometimes financial planners do that make people feel a little overwhelmed. So when you think about funding college, a lot of things are presented to people as an all or none. So on the far end of the spectrum, financial advisors will look at your children's age, look at what money you have available, and then say, well, this is how much money you need to have the first day of school. You need to be able to pay for all of the kids' tuition. So that's the far right, full funding the first day of school. So that's probably the extreme. And in many instances, mathematically, that can be difficult for most of us. Whereas on the other hand, the thought would be, let's just get the child in school. If all we can do is fund the first semester's tuition, that can equally be as much of a win for a family as funding it all. So I always want people to just basically open their minds up to saying, worst case scenario, let's just get the first semester of the first year going, and then we'll back into everything else versus thinking about trying to be to the final end of the spectrum by having all of the dollars for a child's education day one. So I just want everyone to think about that range. If you could go to the next slide. So here, I just basically did kind of some data gathering as to what is the average tuition cost for the state of Georgia. Not that most of you don't know that already, but in some form of fashion, if your child's 15 or 16 years old, if you look across all those different categories, it's loosely about $25,000 if you have a child that's within striking distance of going to college versus if you have a little cute one who's 5 years old running around, it's roughly about $5,000 more based on the projections. So again, if we had to get into the strategy of, let's just say the main thing was just to be able to get the child into school for the first year, the first semester, the tuition and books is kind of the core. When it comes to food, again, that's typically, as most of you all probably have experienced if you have children, it's typically meal plans that kids usually don't like to eat anyway, but it's there as a benchmark. And then housing, you can be pretty creative in housing. You know, some schools do require that freshmen or first year students stay on campus or in the dorms. But again, when you start looking at food and housing, about 50% of it has some level of variation or variability that if you can get your kid in school and in town, you can do a lot of abbreviations of those items. But for the most part, if you think about 4 years for school, if you looked at it in absolute terms, you need about $100,000. At the end of the day, um, there's very few people that have the capacity when a child is somewhere between the ninth or 10th grade or older to basically just come up with $100,000. But again, these are just kind of general broad-based numbers, and we'll get more into the strategy of how we fund. If you go to the next slide, and this is one of my favorite slides. I put this up to be humorous. For the most part, as a financial advisor, obviously the law says you have to have insurance on your auto, and if you have a mortgage on your home, by law, you have to have insurance on your house. But when we think about funding your retirement, funding your disability, funding your life insurance, funding your college, there's no requirements by law that requires you to do the things that are most important. So one of the questions I always do is I say, where is the money? And in most instances, this is just kind of a general average that I pull from some various data sources. And again, not including alcohol. Like me, I'm an old-fashioned guy. But if you look on average, these numbers are pretty much in alignment. So somewhere within the way that we spend money, most of us at least have $300 to $500 being very conservative of various dollars that could either be trimmed or redirected to some of the things that we spend day to day. But if these numbers are accurate, it is frightful over a 25-year period that the average household could literally spend in excess of $250,000 on the day-to-day things. So usually I typically like to have this as a way to kind of think about where can you trim. It's not about not eating out. It's not about not having lunch. It could be possibly shifting to racetrack coffee versus Starbucks coffee. It could be, either cable or streaming. Again, lottery, we could laugh about that, but there's always some opportunities to find money. If you could go to the next slide. One of the tools that I have at State Farm, which again, they have this and they can send it to you. The world is in no short supply of budgeting or budgeting tools. One of the biggest challenges that we have now is when we go to the world of social media, it's so hard to just get to a pure resource without ads jumping everywhere. Are they wanting your email address or needing you to accept all cookies? This is just a nice tool. It's one of 1,000 tools out there for budgets. But what I like about our particular tool, which is a free thing and it's there for you if you want it, is that this tool actually has a calculator built in it. So when you get this PDF, it allows you to key in your income and it also allows you to put in all your expenses, and then it does a tally and it starts showing you basically based on the net of what you bring in and what you spend, how what you bring in and what you subtract, what's left over. Because most of us are so go now and we use check cards, the days of maybe just once a month or once a week balancing a checkbook and seeing where your money is just not a common practice for where we are in society now. So this is one of many of the great tools that you can use to really get an assessment of where dollars are coming and going. If you would go to the next one. So the next topic is funding options for education. So basically what I've done is I've identified 4 general buckets. The first one is Georgia merit and needs-based programs. As I mentioned in the beginning, if you have a child who has a 4.5 GPA and a high 30 on an ACT and 300 community service hours, this first category is typically where you don't need to go further. When it comes to needs-based programs, the word needs typically makes people have a certain kind of reservation, but loosely speaking, there are a lot of programs nationally and statewide that if your household income is typically under $120,000, there's a variation of different kinds of programs that would then be able to play some role in the equation of your college funding. So if you'll go to the next screen, what I did here is I just basically did kind of the top items in Georgia through research that I aggregated that talks about these programs. Most of you all, in some form or fashion, are probably getting some literature from the schools. Most schools, either at the middle school and the high school level, have various programs where parents are invited out, to the cafeteria after hours in the uncomfortable chairs with the cold Papa John's pizza and go over a number of the programs, as well as the guidance counselors. And what I understand in your organization, you also have a number of significant people that are in education locally that may be very versed on these programs as well. So I just assumed that these are some of the given, and the next topical areas are about different methods or mechanisms that you could use as a pathway for funding that maybe people don't always traditionally think about. But I started off at the top with the traditional ones that most people are thinking about that are merit and needs-based programs. So if you'll go to the next slide. So the first one is the use of existing assets. So I basically looked at 3 areas. The first I put is your savings. So again, these are different mechanisms, sometimes that may not require a payment source. And my apologies for stating if you have money saved up, you could use it for college. And I know that has a very common sense sound. But again, always think about that. In the event if you have some form of savings and various things like brokerage accounts, your brokerage could also be a source as well. And this could also be a source of funding. Obviously, in the event if you have been accumulating money and retirement accounts in accounts outside of retirement, you then would just have some tax implications around capital gains primarily, which again could be something under the guidance of an advisor or an accountant, could give you a sense of the potential impact that would happen from selling securities. So like, for example, many people, in addition to just traditional brokerage, can be with companies that give stock. And then there are a lot of different conditions of that stock where there may be a holding period or no holding period, but that can also be a source. The other one here that I have is retirement accounts. Most people in America who work for medium to large size enterprises will have some form of a retirement account. There are various rules depending on what kind of account that you have that you can either borrow from those accounts, and then there are in some instances based on your age, you might even be able to withdraw from the accounts without any particular penalties associated with it, but only paying the tax. So again, depending on your situation, if you ever needed a perspective, I could either look at those things with you or give you some advice, even without seeing them. The next one that they just moved to is looking at resources where you can actually borrow against various things. So a large portion of people in society do have various types of insurance accounts where they have the flexibility to borrow from those funds. People have things such as various universal type policies, whole life policies, and things of that nature. And that can be an option as well. And there's different, ramifications with how you take money from those policies. The other thing also as a consideration, and again, it is just an option. We've all had the real benefit over the last probably 4 or 5 years, particularly being in the South, with a pretty significant growth in the value of our home. So sometimes various home equity loans can be a consideration. You could either get a line of credit or you could either get a loan where they give you a lump sum. Again, there's a payment that could be required, but it can be a consideration that you can compare or weigh against many of the traditional types of student loans that are available to students and or parents. The other thing also too is other assets you can borrow against as well. Prior to being a pure financial advisor or State Farm agent, as I was a banker for 30 years. So one of the things you can do is borrow against things other than your home. Sometimes a paid off car can be a consideration. And then the other thing also is that if you have family members who have assets, let's say there's an aunt or a grandma who has a certificate of deposit, other types of assets, sometimes they can put those assets up for you to borrow against those things. The fancy term for that is called hypothecation, which I don't expect anyone to remember, but those can be also creative alternatives as well. And then at the bottom, I just note there are various loan vehicles, student loans, federal loans, private. There's a litany of other types of loans. If you are looking at loans as a part of the equation for how your son or daughter may go to college, I would say make sure you look at all the different options, look at what the payment terms would be, look at the timing of when they start, and then look at the overall cost of what it would be to borrow that way. And you can compare the various types of options against one another. It's not just one way. Most of us have a lot more options than we realize. If you could go to the next slide. So in the event if borrowing merit base or there are no assets available, these are several of the pathways that you could explore as a way to fund college education. There are 529 plans and there are state plans. So again, that is a vehicle, and we'll talk about some of the conditions of how and what way these various things make sense. You can always save, as we looked at the chart. You could maybe just pull a little skin off of a lot of the areas with going out to eat, Amazon, etc., and either find an additional $10 to $500 a month that you can put in a bucket. Brokerage accounts are another consideration. However, typically when you start getting into something like brokerage, there's typically a certain time horizon that you want to have. If your son or daughter is in the 10th grade, I would not be an advocate of exploring putting something into like brokerage, or I'm not an advocate of cryptocurrency, although there's a wide range of successes that happen. I'm always wanting something where whatever it is you're looking at as a mechanism for saving, there is some reasonable level of protection and safety in the money. Life insurance as well. I know a lot of people are constantly seeing things on the internet about various life insurance vehicles. Again, there could be an appropriateness here, but a lot of it has to do with the time horizon. Even when you look at many of the various life insurance products that have kind of a savings or cash value feature, you're typically needing to see that you're into those types of premium payments anywhere from a year and a half to 2.5 years before you really start seeing some accumulation. So again, time horizon affects those things. And then lastly, student loan programs is also another method of funding, which I'm restating because there's a lot of good options there, particularly in Georgia as well. If you could go to the next slide. And what I'm trying to do is kind of move through a lot of the topics in hopes that it can invoke questions. So I'm in the protection business. I protect people's stuff. I protect people from lawsuits. I protect people from the thought of what happens if you get sick for an extended period of time. Again, I use things like COVID, complicated pregnancies, automobile accidents that could put you on the sideline, as well as premature death. When you get into a lot of the research and studies about what is the number one cause for foreclosure and bankruptcies, it's typically either one of these two sides. Either someone's gotten sick or ill for an extended period of time, or a couple wasn't properly insured or didn't have disability and one of the breadwinners got injured. So, for example, if let's say I'm married to someone and I'm a UPS driver, I get in an automobile accident where I'm not at fault and I get a significant shoulder injury. And it's a significant shoulder injury that puts me out of work for 6 months. So normally, obviously, there's the Morgan and Morgan type thing where even if you're chasing someone to get restitution, that could take anywhere from 7 to 12 months. So that's a 7 to 12 months before something kicks in. Then in the event if I got injured and it wasn't work related, I'm at UPS, let's say I've only worked there a couple of years, I might have short-term disability that might kick in for 3 months or 6 months. I might have long-term disability that if I didn't elect that option, it may or may not kick in. So as a result, even if you're at fault, there's no mechanisms that steps in immediately and provide an income for you if you haven't made those elections. So again, while we're looking at the growth or the building of a bucket, we also have to think about things that happen every day to every one of us that could also disrupt the ability to either fund that bucket of money that's needed for college. If you could go to the next. So again, the question is for you to answer is most of you work for some type of employer. Do you have short-term disability? If you do, how much is it? If you have it, how long does it pay? Do you have long-term disability? If you do, how much is it? And when does it kick in and how much does it pay? And what I'm always fascinated is when I'm doing financial planning with clients, I'm always amazed with how little they know about these benefits because, again, most of us don't really want to talk about tragedy or disruptions in life, but it's something that we have to get an understanding of. So, again, when it comes to life disruptions, I'm always pulling that up to bringing that forward to people to think about while we're looking at the accumulation in what do we have in place in the event if something doesn't happen. So one of the things that's always a fascination is when you get into a lot of the research studies, when people think about protecting their life, most people estimate that the cost of protecting their life is typically 300 to 400% higher than it really is. If you could go to the next slide, and I've already kind of asked this question, if you could go to the next slide. This is just a little simple table. And I only bring this up as one of the examples. If you were 35 years old, and let's say your son or daughter is, let's say, 13 years old, and you're trying to make sure that you have enough resources for college and college costs $100,000. If you're 35 years old, a 10-year policy, a term policy, if you're a female, is $13.66 a month. So again, I'm just using that as an example up top, $100,000 coverage, you're age 35, and you just need coverage for that 10-year window of time while you're accumulating the money for them to go to school. And I only just kind of pause for a moment because if you look at these numbers, they're pretty inexpensive. So again, I know most people have coverage with their employers, but as an advisor, I'm always saying that it makes sense to have an additional layer over you because again, in the event if you lost your job or some life event came up and the coverage went away and then ultimately another tragedy happen, again, there could be an exposure for your family, for college and other things as well. So I only wanted to have this up as an example. And there's a document that she can send to you that you can look at, again, just the overall cost of coverage and how inexpensive it is for the grand scheme of things. If you could go to the next topic. So these are just two or several generic scenarios, and I'll talk about them in the next framework that I have. What if your child's a sophomore and you haven't saved anything in school for them in school? My recommendation is, again, $25,000 a year for college. The first semester all in is probably maybe 10 or 12,000. So then basically, let's just say if you needed to save 10,000, 15,000 over a 2-year hot time horizon, that's 24 months that you have. The idea would be just to get in motion. It would be pretty difficult for most people who only had 24 months left for the first child to get into to fully save. If your child is in the fifth and the eighth grade, now you have a little bit longer of a time horizon. You have 4 years for one, and then you have literally 7 years for the one who's in the fifth grade. You have a different option here. The one who's in the eighth grade, you have a 4-year horizon, a little bit short of too short of a horizon to explore doing something brokerage related because of the variability. If you were to look at something like life insurance, you typically would have to be at least a year and a half in a new policy before any aspect of the premium would turn into cash. A 7-year horizon gives you a different set of options. And then the last one, my child's in preschool. A child's in preschool, so now we comfortably have a 10-year horizon. Obviously, the earlier you start on everything, the more flexibility you have and the smaller amount of dollars that you need to put forward, which again gives you a far more broader set of options. If you go to the next page, this is kind of more of just a decision matrix. Like if you said, okay, what are the determining factors for me to decide how and what I do? The first question is the time horizon. The second thing would be understanding your child's academic performance and the propensity for them to perform at either super high levels, or average levels. So again, that also helps you understand as well, in terms of working with counselors at the school and researching what Georgia has to offer to understand what are some things that are potentially that you're able to influence, assuming you can either sustain or increase a child's performance. And the other is household income. Again, this can be a pretty significant thing looking at the income in your household. Because again, based on that number, it can determine a wide array of options. So I know the political landscape has changed quite a bit. But in many instances, particularly if kids are performing at certain levels, I've had clients where they were able to get full scholarships for their kids based on their household income at big name schools like University of Chicago. I had one to go to Stanford. So I've seen a variety of outcomes that people were surprised that they were able to get based on what's classified as need-based programs. Available assets to use, again, taking a hard examination of what you might have available or who within the family's network might have available as well. A lot of non-traditional things could take place. I could be an uncle and have a niece, and I'm an uncle who's, let's say, like I am, I'm 55 years old. I got $300,000 in my, retirement account, and my sister, and I'm willing to take $25,000 from my retirement account, and she'll pay me back on a monthly basis because it's netting against my current income. So there's a lot of non-traditional approaches that one could take. Assets available to borrow against. One of the things that I do with clients is I typically do what's called a personal net worth statement, where we just kind of look at a summary of what they own and owe. It's kind of like a personal balance sheet. And sometimes we look at their asset positions to determine what might be of use. And then below, I just stated funding plans, 529, saving, brokerage, and life insurance. Again, the time horizon has a tremendous impact on the types of paths that you can select for funding. If you could go to the next selection. So the next steps, again, just kind of restating what I've stated. I think the first thing is to really research and understand the universe of programs that are available based on need and merit. There's so many scholarships, surprisingly, in the world that goes unfunded, and so many of them that many guidance counselors can be aware of, but sometimes it may take an extra proactive step. Because one of the things that a lot of my parents will always say is, why didn't the school make me aware of it? Or why didn't the university make me aware of it? There's a lot of exciting things. I'm actually in Miami with a client, and one of the things that we talked about this morning over breakfast is that they have a child that's actually attending Florida State, and they are a Latin family. And as a result of them having a Latin profile, in addition to the student getting the Hope Scholarship, they're funded at 75%. This scholarship gives them an additional layer of funding, and it comes with a mentor that's going to be an accountability partner to make sure that their son effectively completes the program. But they only knew that as a result of researching. It didn't just come forward. The next thing there is review available assets for use. And then here, determine your capacity to borrow. And what I mean by capacity to borrow, I've always said this to people all throughout my life, the 30 years I've been a financial advisor and a banker. Just because an institution is willing to lend you money doesn't mean necessarily that you can afford it. We, as a financial institution, go behind the curtain and we come back and say, yes, you're approved, you're excited, you sign the paperwork, and then all of a sudden there's a loan booklet for $816 a month. Well, just because they approve you, is your lifestyle such that you really can shoulder that dollar amount? So determining your capacity to borrow is very different than what you might be approved for. And I always ask people, make sure from a budgeting standpoint, you're able to make the kinds of adjustments in life that now that you can add this line item in either before or after. My last one is consult with various advisors to evaluate options. You know, it's really interesting. Most of us in some form or fashion may be active religiously. We have a spiritual advisor. We might go to Orange Theory for exercising. And we have a family reunion. We'll hire a travel agent to research cruises, etc. When you have health problems, you go to a doctor. But when it comes to your financial health, the question is, who is on that team? Most of us in America at least need to have an accountant in the equation, potentially a banker, and in some instances, a financial advisor as well. I would encourage people not to be just a pure do-it-yourself person. There's always some invaluable perspectives that can come out in your discussions when you're working with different professionals. So I would always encourage you to make sure you get a variety of opinions that shape how you have a go-forward decision and not just necessarily self-prescribe and do it yourself in one of the most critical areas of your life. If you could go to, I believe it is my second to last screen. So whenever I'm brought in to talk to someone about one lane, retirement, insurance, investments, auto insurance, college planning, etc., I always bring this up. And if you could go backwards, I think you skipped a screen. Okay, I'm sorry, go up, go back one more. Okay, yes. No, yeah, right there. This is the thing that I always ask people. So please forgive me for just stating it out loud. Whenever I do planning, it's comprehensive. You know, as they say, the hip bone's connected to the thigh bone. You remember that series, you remember that song. Everything in your life is intertwined. So questions that I ask you to think about. Do you have adequate auto coverage? Meaning, do you have inexpensive auto insurance that if you get in an at-fault accident, you're going to get sued and potentially up to 20% of your wages garnished? Do you have adequate life insurance? Other than just auto insurance life insurance at the job, which typically is 1 or 2 years your salary, which is typically not enough to not be disruptive to your life if that was all they got? Are you on a budget? Again, what are your fixed expenses every month and what do you have left over? What are your discretionary expenses? What are the major purchases and how does that fit in the equation of life? We all should be operating on a budget. And then debt. Do you have a plan to reduce or eliminate debt? And one of the things I'll tell you is when I'm working with young professional couples, and again, I'm not against debt, but when I'm starting with a couple early on in life and I sit in front of couples and they're having 80 to $250,000, and sometimes I've seen as much as 400,000 in student loan debt, they hold their heads down. If students are going to step off into the equation and sign up to take on large amounts of debt, just to the best of your ability for you and them, help them understand what that's like. Because I see the back end of that, and I watch young professionals hold their heads down when I get down to that student loan debt. It can really affect the fabric of your life the first 5 and 10 years out of school. And I'm an advocate of trying to have as little debt as possible. That may be maybe going to a state school versus a big brand name school. You sometimes can be talking about the difference of $100 to $200,000 more in a tuition cost that has to be addressed with debt. The other thing is there coverage in place for extended illness? Much like life insurance, it's not very expensive when your annual benefits or annual enrollment period comes around. It could be as little as $13 a month or $15 or $80 a month, but it's something that I would encourage people to really overlook. And then the last one here, or second to the last one, is are you on track for retirement savings? Retirement is the biggest liability bucket that you have. Most of us make household income 70, 80, $100,000 a year. You're going to work until maybe age 62, 65, 67. And most of the research says it's highly probable men will live into their 80s, and it's highly probable that women will live into their 90s. So you're thinking about when you stop working in your 60s, you have to have enough money accumulated to take from a bucket for over 30 years in concert with Social Security. It's a huge liability, and not talking about it and not understanding how it fits in the equation is a very, very risky proposition for most of us. And then the last thing is your estate plan in order. Again, it's so important that we do wills and trust and a lot of those different mechanisms to make sure that when we pass, which we all will pass, the things that we leave behind doesn't create chaos for the family. It doesn't create a circumstance where the biggest winner when you pass is the attorney who's charged the estate some unthinkable amount of money because things weren't in order. So again, I wanted to just for a quick minute go around the big round wheel of comprehensive planning because although college is important, it's one of several things that needs to fit in that entire wheel of all the things we all should be thinking about. Okay, and if you could go to the last one, then the last part here is resources available. I've sent several really nice pieces of digital collateral material. They're PDFs on budgeting, 529 plans, life insurance, disability, as brokerage and investments, and estate planning. Those things, as they go to you, I will never know if you got them. If I can be a resource, I'm happy to help, but that's not my end game. My end game here is just to share and educate. And if there's other topics that you might need resources in, I'm part of State Farm. We're one of the largest companies in America. We're one of the largest insurance companies in America. We have tons of resources to help you, and I have tons of links that are online as well that doesn't require you to have an email address or accept cookies. It's just there to help improve the fabric of families here in America. So with that said, this is the extent of my what I would call a conversation, and I hope that maybe the things that I've shared with you have been of value and potentially invoke questions that you can either direct to me now or at a later time. Please let me know if there's any questions. And if you're speaking, I'm unable to hear you. I know that there was a few challenges with the audio on the other side.
Hi, Mr. Nathaniel. Sorry, I had to plug the camera back in. There,
No worries, I understand.
there is one question.
One question, if you have a 529 and by chance if they finish school, should it be rolled over into a Roth IRA?
That is one of the options. Part of the condition for that new tax change is that the 529, I believe, needed to have been in place for 5 years to roll into a Roth. The other direction is that you can redirect those dollars to another family member or even yourself for an educational endeavor.
If you got a 401k with a company you no longer work with, should you leave it there or should you roll it over into a Roth IRA?
Okay, so I'm going to answer that in layers. So if you have a 401k at an existing company, there are a couple of options you could do. One option is you could roll those 401k dollars into an existing 401k plan that you have with an existing employer. That's one option. If you roll it over to an existing plan, what it then can become is part of the equation that you can borrow from at that particular plan. Now, every plan is assembled a little different. If you plan on not borrowing from it, one of the options that you can do, depending on the way your plan is structured, if you roll it to a new employer's 401k, is many 401k plans will now allow you to convert within the plan to the Roth option. I'm a big advocate of the benefits of a Roth option as well as Roth IRAs. The short-term disadvantage is that you're now taking dollars that historically were pre-taxed, and now you're making them dollars that may generate a tax event for you right now. But the benefit is long term, all the growth on that money is tax free, not tax deferred. So again, you can take the 401k, move it to an existing employer's 401k, have the flexibility to borrow from it as an option where you don't get the tax consequences when you borrow, or leave it in, or convert it to the Roth version, the Roth conversion feature that exists in a 401k plan. Now, the other option is the 401k dollars that are with an existing employer. You can now move it to an IRA, a rollover IRA. Now, a rollover IRA can be one of two. You can keep it as tax deferred, or you can convert it to a Roth. If you're going to convert it to a Roth, depending on the dollar amount, I believe you need to do some math around that. So let's say if you had 50,000 in a 401k, and then you want to move it to a traditional IRA and convert it. Well, if you convert it all at one time and it's $50,000, you're going to generate $50,000 in income on your tax return in addition to your current income. So typically what I do when I work with clients is I roll it to a traditional. We do the math on their taxes in partnership with their accountant, and we may only convert 10 grand a year. 10 grand a year, realizing income might only be a tax liability of 2 or 3,000. Well, you may already be getting a refund of 1,500 or 2,000, and we might just be neutralizing your historical tax refund. So I believe in doing it in stages unless you have a circumstance to just realize that income all at one time. In most instances, the conversion to a Roth is the better long-term play in most instances with clients. So I apologize with the multi-layer of answering for that question, but it's not just an all or none, it's kind of an if then. And 1 second, I need to plug my computer in, which I made an error, so I'm looking a little goofy at the moment. So 1 second. I'm sorry. I didn't want to disappear on you. Sorry about that. Other questions that you might have?
I think we heard where you were working with a client who has a student at FSU. Did you say they were on the Hope Scholarship?
There, the scholarship in Florida is called Bright Futures.
Yeah.
So,
yeah.
so Florida's, yeah, it's called Bright Futures. And in addition to their Bright Futures scholarship, they also discovered, because they're Latin, that there is a specific scholarship that's geared because of the limited representation of Latins in the on the collegiate level. So there's not only resources to go towards education, but they have a whole counseling and mentor framework for that student profile. And I was using that as an example.
Any more questions?
Oh, I do got a question. How you get into the line of work that you do?
Oh, okay. Well, that's interesting. All right. So, because I'm old, right? I'm 55. So
How old did you say you were?
I'm 55.
Oh, I thought you said-
So I
It's not old.
I'll go all the way back. So I in college I interned with an organization called Inroads. I don't know if you all remember the organization. It's evolved quite a lot. So initially I was on track to be a hospital administrator until they wanted me to go to Rochester, Minnesota. And that's way too cold and too far from my mama. So I started looking at other organizations, and I was real active in fraternity life and things of that nature. And I was actually going to the career fairs, and at the time, the banks were there. And one of my friends said, "Hey, they have an open house in the bank over there. They got food and a full open bar." I'm like, "Well, man, I need me a meal." So I threw my suit on and went on over there and was having a beer and eating some food and talking to them about banks. And I got into a bank management trainee program. And then the rest was history. So that program put me on track to be a branch manager at about 25 years old. And then my career just moved in layers. So in the back end of my banking career, I was the president of a bank, Fifth Third Bank. And then my last assignment in banking before I owned my own State Farm agency, I actually ran the entire wire desk for all of North America for the Bank of Mitsubishi's Union Bank Corporation. So I flew around between Florida, New York, India, had locations in California, et cetera. But over time, what I realized is that my love has always been the client advisory part, not necessarily all the big fancy name jobs, because I really built my career with the one-on-one relationships with clients. So I've been a broker, a commercial lender, a private banker, just the whole round robin. So I've always had a chance to really have a 360 view of how money and debt, all kind of converse to give people a good outcome. But I just continued to kind of stay the course and get in the space. But financial services is a wonderful profession. And for our own people, it's probably needed more than ever. The nice thing now is that we have money, and historically we haven't. And the beauty is that the average person making 40, 50,000 a year, if they just discipline themselves to set aside, let's say $500 or $600 a month, going down all the different paths, everybody can easily mathematically be a millionaire, just dollar cost averaging into plain vanilla stuff. And we really need it now more so than ever, but I won't go on my tangent and get nonpartisan. So
Does anyone have any more questions?
I'm on LinkedIn. If you want to just kind of see my profile, everything I've done, if you want to reach out to me, you can email me or text me. It's not going to wrap up with me trying to do any kind of sales pitch. I'm just here to help. They can share my my cell number, and you can just text me or call me. I'm leading with just the spirit to want to help. So anything I can do to help advance, the your economic agenda for the well-being of your family and your children, we can. And again, we need to be piping as many of our children that want to go to school into school right now. Education is even more fierce than ever. When you look at the economic environment, currently right now, most people are feeling the weight of how to win financially, and it's not going to ease up because again, when you look at the technological advancements and globalization, that's the weight that we're feeling. The improvements in technology and globalization is what's making it harder to make a buck. And education is one of the different agents for mobility and for winning economically. It's not the only one, but it's an essential one.
No more questions? There's no more questions? Okay, well, thank you, Ms. Nathaniel, for your time and taking the time out to provide all of the resources that we will provide all of the attendees afterwards, all the slides from all of the speakers, any handouts that they provided me, I can supply that to you all at the end. But if we could please become a
Thank you so much. Well, I hope you all have an eventful conference, and I hope this 60 minutes was worth your time. And anything I can do to help it advance your economic agenda, I'm happy to do so. So God bless you all, and thank you for your time.
Absolutely, thank you.
Bye-bye.
108, and we have Mr. Nathaniel Herring. He is a